Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again David Wolfin. He is the president and CEO and director of Avino Silver and Gold Mines. He's been in this business for some 26 years. He learned the business from the ground up, starting as a geologist. He assisted in Nevada, metallurgist assistant at the Avino mine in Mexico, and later in a number of mining and exploration-related capacities. And in the late 1980s, David worked on the floor of the Vancouver Stock Exchange and for several brokerage houses, gaining solid information in the financial side of the industry as well. So he brings with him a well-rounded background, and his father was really worked on Avino mines. I've known his father for many, many years, Louis Wolfin, a legend in the Vancouver mining circles in earlier days, and also with various other companies, Levon Resources, I believe, or Levon Mines, I forget the exact name, and Braylin Mines, which now comes into play, and we'll be talking to David a little bit about the Braylin Mines as well, which his father was involved with years ago. But Avino Mines is traded in New York and Toronto under the symbol of ASM. I looked at it a little earlier today. It was trading at $1.32 in U.S. money. There's about 32.6 million shares outstanding, so it has a very modest market cap of around $43 million. Its mines, its main primary operation is in Durango, Mexico, and it has been very successful. It's a mine that dates back to 1558 when the Spaniards found this deposit, and it was first mined by the Spanish all the way back in those days. So it's got a rich history, and but more importantly, it also, I think, has a rich future. It certainly has been doing very well with David Wolfin at the helm. So welcome, David. Really good to have you back with me again.
Great to be here. Thanks, Jay.
Really good to have you again. I just want to ask you if you could just sort of summarize your mining operations in Mexico. You have, I think, a couple of different mines down there. Tell our listeners about those mines. How much are you producing now, the cost, and so forth?
Okay. Well, Avino has a rich history. There's probably over a dozen mines, small mines that exist on the property. So we've reopened one called the San Gonzalo mine, and I'm going down to the property next week to basically christen reopening the Avino mine. So the mill is processing at 500 tons per day, and next week we'll be at 1,500 tons per day.
Wow.
Last year we produced about 900,000 ounces of silver equivalent. This year we're on pace to do 1.2 million, and next year we have a target of 3 million. So we're growing, yes. And our costs, you asked about, last year our cash cost per silver equivalent was $10.16, and the all-in sustaining was $14.39. But we've been able to reduce our costs this year, renegotiating consumables and power supply and that, so forth. So our cash costs in the first 2 quarters are under $9, and all-in sustaining is under $13.
Wow, that's really good. So even with very low silver prices, you're still showing a nice gross margin.
Sure, and we expect our costs to drop even further with bringing Avino back online because you have economies of scale. And also, we just got full service power throughout the mill. One of our circuits was operating on a generator, so now it's running off the grid, and the power costs will drop in half.
Wow! So there's a lot to be optimistic about here with those kind of increases in production and reduction in cost. 3 million ounces that puts you in sort of a mid-tier or upper level silver producer almost. I don't know where that puts you amongst your peers, but that's a pretty sizable production facility.
Absolutely, and we have other areas on the property we want to expand even further. We have an old tailings pond with 6.7 million ounces of silver in the bottom and 40,000 ounces of gold. And this is the oxide tailings from when it was open pit mined in the 70s. So we did a PEA on reprocessing those tailings through heap leaching, and that would add another 1.4 million ounces of production, take us well over 4 million ounces a year. But that's a few years down the road because it's an active tailings dam, and we're just designing a new one. So once we decommission it, then we can look to move that project forward.
Yeah, so you said there's 12, there's a number of mines, there's old mines that were mined in the past. So you have a lot of exploration potential then, I guess,
Sure.
there
I've got a team of geologists heading down there in 2 weeks. There's 3 of them that are independent and consulting geologists that are going down to meet our team down there to go around to look at the regional areas. We basically mothballed exploration after the 2008 financial crisis. We wanted to focus on getting cash flow. So now we've got the mine up and running. We've got the expansion almost behind us. In the next few months, it'll be done. So next year, we're going to look to do regional exploration around the property.
Wow. So that's very interesting. What do you so what sort of cash flow and what sort of balance sheet do you have now? You have some cash, I guess your cash resources, we don't have to worry. You've done a remarkably good job of 32.6 million shares outstanding, which I think is incredibly tight.
So we have just under 35 million because we just issued about 1.7 million for the Braylin acquisition.
Oh, okay. Yeah. All right. Sure. Fair enough. But you're getting something in return for that. Why don't we just talk about that now? The
Sure.
Braylin acquisition, and we'll get back to the operations in Mexico. But now that you bring it up, the Braylin, tell our listeners about that. That's a gold mining property. It's an underground high-grade mine, I believe, right?
It's an operating mine. It's operating basically at a pilot scale, 100 tons per day. Originally, Avino acquired it from Homestake in the early 1990s, but when my father was running the company, he didn't have the money to develop it, so he created the new company, Braylin, and spun the asset out. So we're very familiar with it, so it's just reacquiring what we've already known all along. And it's got a very rich history. It's produced over 4.5 million ounces of gold, so it puts it in the world-class category. And it was made up of 3 mines, the King, the Braylin, and the Pioneer. The Pioneer was owned by the Guggenheim family, and Pioneer was listed on the New York Stock Exchange in the 30s. It paid dividends for like 15 years, so it's a really high-grade mine.
Yeah. Well, what is so what are your plans with that, David?
Our plans are to maximize production. The permits allow it to go to 500 tons per day, and this mine, we've got the president of Braylin's joining us. He's got a PhD in geology. He was a runner-up in the Gold Corp Challenge in 2000 and went to work for Gold Corp at the Dickinson mine. And then he got tired of commuting from British Columbia, so he joined Braylin back around 2002, 2003. He estimated the potential there is in the millions of ounces, but it needs money for exploration and upgrading the mill and the equipment there. So that's what we're going to do, is bring in our expertise. The size of our company allows us to finance equipment and bring in new equipment and really modernize it and upgrade the operation there.
So the strategy will be similar to what you employed down in Mexico. That is to focus on cash flow first, get that up and running and cash flow positive, and then use the proceeds to explore and develop something bigger, possibly?
Exactly.
And will the 500 tons per day, I suppose, should bring with it some economies of scale?
Absolutely.
Over the 100 tons per day. What sort of grades are you looking at there, David?
Well, right now they're mining about 1/3 of an ounce per ton, but the average grade of the mine for when it produced the over 4 million ounces was 1/2 ounce. So we want to try to find the higher grade lenses as you get down deeper. This is a mesothermal type system, exactly the same as Red Lake District. So these things have roots. They go down deep. Braylin goes down a mile, and we own the whole camp. So we're exploring the gap zones in between, and so there's not a lot of, not any dewatering that's required at this point. It's just starting near the surface and working our way down.
Mm-hmm. So so I guess what I'm trying to grapple with is the capital that's going to be required to get this up and running. Have you any sense of that yet, or is that still something you're working on?
We're studying the PEA that was done about 1.5 years ago, and it called for about $17 million to take it up to about 300 tons per day, and then it would sort of self-finance itself from there. So we're looking at that, but we're also looking at ways of cutting operating costs. Because labor costs in Canada are expensive, and there's shrinkage stope mining up there. So we're looking at bringing in possibly more mechanized type mining, long hole mining, which would reduce our operating expenses.
Do you have a resource there, David? It's probably not a very large one yet. It's an underground mine, so it's obviously you don't pile up the resources like you do for an open pit project. But what sort of resource do you have there, if any?
Yeah, it's pretty small. You're talking about, I think there's indicated about 70,000 ounces and inferred about 30,000, so combined about 100. But when it was taken over from Homestake pre-43-101, it had a million tons of a third of an ounce left in the mines. 60% of that's below the water table, so that would be 300,000 ounces. But we're not even going after those areas at this time. We're just starting near the surface and going to work our way down. And as the money becomes available, then we'll look to expand it faster.
All right, so that's a very promising. So you didn't really have to give up that much to pick this up. Although I guess you were helping a little bit with the financing. The company was running into some financial issues, I guess, and you helped to keep it going. Isn't that how you sort of re-entered the picture here? Yeah,
exactly.
And so you were the white knight, so to speak, to help this little company out, and it really it's very neat. I think that the fact that you've been able to bring this back into the picture, because your father was involved with both of those companies, and so it's. But getting back to Mexico, then, I guess you're in pretty good shape there for growth and lots of exploration potential. Yep. Do you have some guidance in terms of production this year?
We're not supposed to talk about guidance because. Okay. Of the lack of a feasibility study. The original feasibility study was done in 1969, so it's a little outdated.
Yeah, I guess so. I guess things have changed a bit.
The throughput of the mill, you look at what we produced last year, and if you take the benefit of hindsight, what Avino produced leading up to closure in 2001, you can put all that together and you see what our target, the target is 3 million ounces a year.
3 million ounces a year should bring in some nice some nice cash flow given the costs outline that you just outlined, the reduction of cost with the economies of scale and so forth. You don't have any need, do you, David, to raise money? Can investors be happy with 35 million shares, or do you see the possibility, or do you need a lot higher share price before you'd entertain that idea?
Yeah, I mean, last time we raised money earlier this year, it was around $240, $250 US. So we don't really want to do anything below 2. So once the market starts to recover, we'll assess what our requirements are. But we're not desperate for cash, so we have the ability to do equity, debt, offtake, hedging. We can look at any source of financing. Whatever is best for the company and the shareholders is what route we're going to take.
Well, that's the beauty of a company with cash flow. This cash flow positive, you don't have to go out and raise money in these wretched equity market, with equity market prices where they are, that you have various options available to you. And this is the kind of company that I think my listeners and my subscribers want to pay attention to. Because you can buy Avino Mines and others like it. No two companies are alike, but others that are sort of smaller producers that can grow dramatically, percentage-wise. The big guys can't grow nearly as rapidly in percentage terms. Cash flow positive. You don't have to go out and raise money and dilute the heck out of the shareholders, which is, I think, one of the biggest risks that shareholders face in this industry. And so I have a hard time finding much wrong with this story, David. What keeps you awake at night, or what would be the biggest risk that investors might have to worry about?
Well, just the price of silver is the only thing I can see. I mean, if it continues to go down, that wouldn't be good.
Yeah. Well, it's hard to see. As we were just mentioning, Charles Nanner and some of the other analysts that we follow are turning bullish and believe that we've seen the worst of it, and he's looking for a turn in silver very shortly. Let's hope he's right. Anything else you'd like to add before we conclude our discussion today?
Oh, just to let people know that we're always available here. If people have questions, they can call or email. And
your website,
an open door policy, so we encourage people to reach out to us with any of their questions or concerns.
And your website, I guess, is they can Google about Avino Gold, and what's the website?
www.avino.com.
Avino.com. Can't be much easier than that. David, I want to thank you. It's a great story. Thank you for sharing it with our listeners.
It's been my pleasure. Thank you very much, Jay.